All right, so we are in the middle of July and the deadline for individuals to file their income tax return is fast approaching. Now we understand that filing income tax return can be an overwhelming task. Now given the volume of information and tax jargons involved, the entire process may seem daunting. And so on the Money Show today, we will break down all the process that various aspect of this entire process. And for that, let's welcome on board Preeti Khurana, Chief Editor, ClearTax, and take this discussion forward. Hi Preeti, good evening and welcome to the show. So I think it's very important to get the basics clear over here, and the major confusion that usually viewers have or taxpayers have is about Form 26 AS and the AIS, where you have your entire financial information, your annual financial information listed. The importance of these two forms and how can one look at it?
As you very rightly said, that Form 26 AS and AIS are the most important forms that you require for your tax filing. Now, AIS is actually a very comprehensive statement. It has all the information that you need. It has, your interest income. It will have your TDS information. It will have if you earned any rental income, where the person who's a tenant in your property has been claiming HRA, then that rental income will appear in your AIS. So AIS is actually pretty comprehensive. You will see even your transactions with respect to sale purchase of mutual funds or equity shares will also appear in this form. Now, what the government has done from this particular tax filing is that all your tax payments, so whatever taxes you have paid, are also now only appearing in your annual information statement, which is your AIS. So earlier, these tax payments used to show up in Form 26 AS. That has now changed. And AIS is the form that you need actually for your tax filing. It has everything which is there in Form 26 AS. And what you can do is, since it's a pretty complicated, it's a large form, I would highly recommend taxpayers to use the pre-fill option. Now, you can use this on the income tax department website, or you can use it on ClearTax, or whatever online format you are using. What pre-fill will do is that it will pick up information from the AIS and populate your income tax return. Now, this is very, very important because you need to capture whatever is there in your AIS. So it could be related to any dividend income. Then you might have fixed deposit interest income. You may have savings account income. If you have earned any rental income, that is also likely to appear. Anything where a TDS or a TCS has been collected from you, all of that information will be available in your AIS. So if that form is bothering you, then use the pre-fill option. In case of Form 26 AS, I think that's kind of more relevant right now if you want to just sort of review on an ongoing basis, what are the various TDS deductions happening, what is the income related to it which has been earned. But essentially, what you will use this year will be your AIS.
So, Preeti, one very important aspect, as you also just highlighted, that one should know what's the right kind of form for them. So, talking about a salary class and also talking about someone who has income from maybe the virtual digital assets, cryptocurrencies or NFTs, freelancers or people, who have their own businesses or startups. What is the form layout for them, and how can they make sure that they don't end up filling the wrong form?
Absolutely. I think, that's a key question. And a lot of people get confused with these various ITR forms. So, before we talk about what each of these forms have, I think the easiest way would be to use an online platform where you don't need to choose the form, based on the information entered by you. The form is automatically selected. So that's one way to take care of this scenario. The other thing is, a lot of people ask this question, that they have capital gains and they also have salary. So do they need to file one form or two forms, and how do they report these various kinds of income? So essentially, you will file only one type of ITR form based on the type of income you have. Now, we can go one by one. Firstly, you have the ITR 1, which is applicable if you are resident in India for tax purposes. So residents can file ITR 1. The other conditions to be met are that your total income should be equal to or less than rupees 50 lakhs. in the whole financial year 22-23. And also, you should own only one house property. That's when you can file ITR1. Of course, you can report interest income in it. It has a section for other sources. You can include that. Salary income, pension income, all of these can be included in ITR1. Now, if you are someone who is non-resident, or if you are director in a company, or if you have unlisted equity shares, your total income exceeds rupees 50 lakhs, or you have capital gains. In this scenario, you will only file ITR2. So ITR2 becomes applicable in these cases. Let's say you only have salary income, but the total income exceeds 50 lakhs, then you can't file ITR1. Then you have to go to ITR2. ITR3 is mostly for business income. Now, those who are filing ITR3 are able to report salary, capital gains, income from other sources, which is your interest income, fixed deposit interest income, rental income, capital gains, and your business or professional income in ITR3. So ITR3 is actually the most comprehensive form. It has all heads of income, and anybody with business income needs to file ITR3. Now, a lot of times you may have, incomes like intraday trading. Then also you can file ITR3. You have to file ITR3. As you spoke about income from selling cryptocurrencies or virtual digital assets, you can file ITR2 if you don't have business income. So if you just have income from cryptocurrencies, you have salary income, you can use ITR2. And ITR4 comes into the picture. It's also a specific form. It can only be filed if your total income is up to rupees 50 lakhs and you're using presumptive taxation. You are taking the benefit of presumptive taxation, which means you're using rates, that there's a special scheme for specified professions and businesses where if they meet the turnover threshold criteria, they're eligible to file a much simpler form, which is ITR4. But again, if your total income exceeds 50 lakhs and you have business income, or even if you have capital gains or whatever, you can file ITR3. So don't get too bogged down by how to choose the form. Just use an online platform where they will automatically, based on what your various types of incomes are, they will at the back end choose the accurate form for you. Just make sure that you're filling all the fields accurately. I think that will be enough.
All right. Also, Preeti, what are the common mistakes that you've seen people making while filing their ITR? Ideally, it's better if you can go to a professional to get to do it, but a lot of time people want to do it on their own, and that also becomes a very cumbersome and a daunting task to do it yourself. But what would be the do's and don'ts that quickly you might just want to highlight to our viewers if you're doing it on your own?
Sure. I think a lot of people are now choosing to file their ITR on their own, and that's a good thing. It helps you understand how your tax return works. So I would just advise people to be careful about dividend income. If you hold any equity shares and you earn dividend income, it's probably sitting in your bank account and you will be able to locate it through your bank account statement. So don't miss including dividend income. Just go through your bank statement. Include your savings account interest. If you have capital gains, then it's very important that you use an online platform, upload your capital gains details so that all your capital gains schedules can be accurately populated. SEBI had recently come out with a report saying that a lot of people who did futures and options were into losses. I think it was an overwhelming percentage, probably around 90% or so. If you are somebody who has had a loss either from a business or capital loss or loss from futures and options, you must file your return because you are able to claim set off. If you're not able to set off your losses in the same financial year, you're allowed to carry them forward. So make sure you report your losses as well. And AIS, whatever information is present there, make sure you go through it and ensure that you've included all of that in your tax return. Fill your bank account information accurately wherever you want to receive a refund. And yeah, I think those few checks will make sure that you filed an accurate return.
All right. Is there something as a nil ITR or a zero ITR also which people should know about?
Yeah, essentially, when you're filing a tax return and you don't pay any taxes, that's a nil ITR. Now, this might happen when you have income, but you've claimed deductions, you've claimed ATC, and your total income comes below the taxable limit, and you pay zero taxes. That's what people call nil ITR. Those who have foreign assets, so if you have any foreign asset or foreign income, even though that may be below the taxable limit, you are mandatorily required to file an income tax return. So even those returns may turn out to be nil tax returns, which means there is no tax due or tax to be paid as per those returns, but it might have certain disclosures with respect to your foreign assets. So please make sure, if you are someone who has foreign assets, you're filing your tax return. In case your income is below taxable limit, but certain TDS has been deducted, say, for example, you have fixed deposits or you have done certain investments where TDS comes into the picture, then you can claim a tax refund by filing an income tax return, and that has to be filed online. So file your tax return. If your income is below taxable limit and some TDS was deducted, you will be able to claim a refund of that. Yeah, I think those are the key things to keep in mind.
All right. So far, last question to you, Preeti. Any chances of the deadline getting extended?
I think this time, like last time, there's very little chance that the government will extend the timeline. Chartered accountants usually have to deal with multiple deadlines, and it's always good, when there is enough time. And the portal was up and running, when the filing began. So we are not looking at any extension. So I would advise not to wait until the last minute. And recently, the released data around a significant number of tax returns have already been filed. So therefore, it would be advisable to not put this off until the last minute. You might have to, seek assistance, or you may be missing some information. So take some time out. The weekend is coming up, and file your tax returns.
All right, Preeti, I think that will be all. Thank you so much for being on the show today and helping our viewers with their ITR filing queries. Thank you. On that note, let's take a quick break, but then post that, let's figure out how to select a financial planner for yourself after this break.